Hello students, today we will start our macroeconomics topic foreign exchange rate. Macroeconomics topic foreign exchange rate. Okay student, let's start. Meaning of foreign exchange rate. Rate at which one currency is exchanged for the other. It represents the price of one currency in terms of another currency. All the countries have their own currency, so it creates problems to given and receive payments. So there occurs the need for foreign exchange rates. Every country wants their payments in their own currency. Exchange rate fluctuates from year to year and even day to day according to the latest changes in supply and demand. $1 is equal to 72.96 rupees. Now, currency depreciation. Decrease in the value of domestic currency in terms of foreign currency. Orderly. Currency depreciation can increase a country's export activity as its products and services become cheaper to buy. There is a fall in the world price of a country's major export. This leads to a decline in export revenues and a fall in overseas demand for the exporting nation's currency. Currency appreciation. Increase in the value of domestic currency in terms of foreign currency. And appreciation makes exports more expensive and imports cheaper. Appreciation is directly linked to demand. If the value appreciates or goes up, demand for the currency also rises. Forex traders often talk about one's currency's strengthening in relation to another, meaning that it would cost more to buy or that it can buy more of another currency when sold. Now, the next is types of foreign exchange rates. There are three types of foreign exchange rates. First, fixed exchange rate system. Second, flexible exchange rate. And the third is managed floating. Fixed exchange rate. In this exchange rate gets fixed by the government to maintain stability in the economy. The government decides it in terms of gold standard, like 1 gram gold in America in dollar. $1 is equal to 1 gram gold in India, rupees 50. So exchange rate is $1 is equal to rupees 50. It is also known as pegging. Now the second is flexible exchange rate system, in which exchange rate is determined by forces of demand and supply of different currencies in the foreign exchange rate market. If demand for dollar gets increased, then exchange of dollar will get increased in comparison to Indian rupees. If dollar demand gets decreased and supply gets increased, then dollar will get cheaper in comparison to Indian rupees. It is also known as floating exchange rate. Third, managed floating exchange rate, mixed form of fixed and flexible exchange rate, determination left over market demand and supply. Suppose $1 is equal to rupees 45, $1 is rupees equal to 50, and $1 is rupees equal to 55. So it restricts that $1 will not go below and above 45 and 55. If it goes beyond that limit, then RBI will interfere in it in case of India. How will RBI manage the exchange rate? Suppose exchange rate comes below the limit, then rupee will get stronger. Dollar will get held by RBI in this situation, then dollar will get reduced, then rates of dollar will be increased in the market. Suppose rupee will get weaker, we have to increase the supply of dollar, then dollar will get weak in the market, then our Indian rupee will get increased. Like जितनी फॉरेन एक्सचेंज हमारे पास होगी उतनी ही ज़्यादा पावर हमारे पास होगी एक्सचेंज रेट को कंट्रोल और मैनेज करने का भी हमको उतना ही राइट होगा। सपोज़ डॉलर महंगा हो गया, इसका मतलब क्या है कि डॉलर की डिमांड ज़्यादा हो रही है। डॉलर महंगा होने का क्या मतलब है कि उसके कंपैरिजन में रुपी सस्ता हो रहा है। देन गवर्नमेंट विल नॉट डू एनीथिंग विद इन द लिमिट। जब तक वो लिमिट में है तब तक गवर्नमेंट कुछ नहीं करेगी, बट आफ्टर दैट RBI will take out dollars from their foreign exchange reserves and increase supply of dollar in the market. सप्लाई के बढ़ने से डॉलर की एक्सचेंज रेट नीचे आ जाएगा। जब डॉलर की एक्सचेंज रेट नीचे आ गई तो इंडियन रुपी क्या होगा, वापस से ऊपर चला जाएगा। ओके स्टूडेंट्स, devaluation versus depreciation. Devaluation occurs when a country makes a conscious decision to lower its exchange rate in a fixed or semi-fixed exchange rate. Devaluation क्या होता है कि जब गवर्नमेंट खुद डिसाइड करती है कि उसको एक्सचेंज रेट को लोअर करना है, या तो फिक्स्ड कोई रेट होती है या थोड़ी ऊपर नीचे रेट पे उसको डिसाइड कर लेती है। बट डेप्रिसिएशन इज व्हेन देयर इज अ फॉल इन द वैल्यू ऑफ अ करेंसी इन अ फ्लोटिंग एक्सचेंज रेट। बट डेप्रिसिएशन क्या होता है, फ्लोटिंग मार्केट में जो हमारी वैल्यू करेंसी की डाउन होती रहती है। इन जनरल एवरीडे यूज devaluation and depreciation are often used interchangeably. They both have the same effect, a fall in the value of the currency, which makes imports more expensive and exports more competitive. Okay, so this is the difference between devaluation and depreciation. Now the next is, what is revaluation? When a government or central bank intervenes in the market for its own currency on foreign exchange market to raise its value relative to another currency or currencies. Measures may include raising domestic interest rates, purchasing the currency using foreign exchange rates, or restricting the outflow of capital for foreign investment exchange controls. जब गवर्नमेंट या सेंट्रल बैंक इंटरवीन करती है, जैसे हम अपने अभी पढ़ा था कि इंडियन रुपी को वापस लाने के लिए डॉलर को क्या कर दिया था, उसने होल्ड कर दिया था। तो उस हिसाब से हम क्या करते हैं कि जब हमको अपनी वैल्यू करेंसी की इंक्रीज़ करनी होती है तो उसको हम बोलते हैं, उस प्रोसेस को हम बोलते हैं रीवैल्यूएशन। जब गवर्नमेंट या सेंट्रल बैंक इंटरवीन करके अपनी करेंसी की वैल्यू को रेज कर देती है दूसरी करेंसी की कंपैरिजन में। Merits of fixed exchange rate system. Exchange rate stability. In defense of fixed exchange rate system, it has been pointed out that it ensures stability in exchange rate. Exchange rate stability, it is said, is necessary for orderly development of the international economy and rapid growth of world trade. If the exchange rate is unstable or variable, the exporters will not be certain about the price they would receive for the goods to be exported by them. The importers will not be certain about the prices and the payments they have to make for their imports. These uncertainties involve risk for exporters and importers. This greatly harms the growth of world trade. Thus, the chief merit of fixed exchange rate system is that it eliminates the possibilities of such uncertainties and associated risk, and thereby promotes foreign trade. It is important to note that for the developing country, a stable or fixed exchange rate system has a special advantage. This is because the developing countries have a large and persistent BOP deficits. As a consequence, if the exchange rate is flexible and not fixed due to these large persistent deficits, the exchange rate or international value of their currencies will be continuously falling. Thus, fixed exchange rate system prevents this continuous tendency for the depreciation of their currencies. Second, promotes capital movements. It facilitates capital movement by private firms. A stable currency does not involve any uncertainties about capital loss on account of changes in exchange rate. Therefore, fixed exchange rate system would attract foreign capital investments. Foreign private firms would not be interested in making investment in those countries whose currency is not stable. Since foreign investment is an important source of economic growth, the fixed exchange rate system would promote rapid economic growth of the developing countries. Third, serves as an anchor against inflation. It prevents the government of the countries from adopting inflationary policies. Generally, governments have often been tempted to pursue undue expansionary fiscal and monetary policies to lower unemployment and create boom conditions. However, inflation has several bad effects for the economies. It increases inequalities of income and wealth and hurts the poor more. Further, inflation hampers economic growth in the long run. Fixed exchange rate system forces the governments to achieve price stability by taking effective anti-inflationary measures. This is because in the case of fixed exchange rate, inflation will cause balance of payment deficits and result in loss of international reserves. Therefore, this forces the government to adopt measures to check inflationary pressures in the economy. Hence, the authorities will have to take countermeasures to stop inflation. Fixed exchange rates should therefore impose a discipline on governments and stop them from pursuing inflationary policies which are out of time with the rest of the world. Fourth, promotes economic integration of the world. It has also been argued in favor of fixed exchange rate system that it is necessary for achieving economic integration of the world community. This is similar to a single common currency in a country which promotes economic integration of a nation in the sense that it facilitates communication, trade, and free movement of finance between different regions of a country. It ensures free, free competition among all producers and consumers of various countries. Similarly, a common currency would promote economic integration of the world. Fixed exchange rate between the currencies of the various countries approximately serves the purpose of a single currency between different countries. Thus, fixed exchange rates among different currencies is a necessary condition for the purpose of forming economic union between various countries, that is, forming a regional grouping. To enjoy the advantages of economic unity in recent years, there is a proposal for issuing a single currency for European countries to strengthen the economic integration of European countries. So these are the merits of fixed exchange rate system. Now, demerits of fixed exchange rate system. First, huge reserves of gold, because in this currencies gets converted into gold standard. Second, huge gold reserves hinders movement of capital. Stability of the market induces mobility of international capital, of course, but at the same time, huge reserves of gold is a hindrance to the movement of capital. To that extent, growth process in the global economy tends to suffer. Third, fixed exchange rate may not be the equilibrium rate. Equilibrium means where demand and supply intersect, but under this exchange rate, determination is done by government. Third, Fourth, discourages venture capital. It does only international payments, not no type of investment, so it discourages venture capital. Fifth, it makes it hard to combat recession or depression. Depression can be corrected by increasing the money supply, but it is very difficult to increase this type of money supply in the gold standard form. Restricts economic growth. Supply of money will increase economic growth, but due to insufficient gold, it can't be increased, so it hampers economic growth. So these 6 points are the demerits of fixed exchange rate system. Now, next is merits of flexible exchange rate system. Independent monetary policy. Under flexible exchange rate system, a country is free to adopt an independent policy to conduct properly the domestic economic affairs. The monetary policy of a country is not limited or affected by the economic conditions of other countries. Shock absorber. A fluctuating exchange rate system protects the domestic economy from the shocks produced by the disturbances generated in other countries. Thus, it acts as a shock absorber and saves the internal economy from the disturbing effects from abroad. Third, promotes economic development. It also promotes economic development and helps to achieve full employment in the country. The exchange rates can be changed in accordance with the requirements of the monetary policy of the country to achieve the planned national objectives. Promotes international trade. The system of flexible exchange rate systems does not permit exchange controls and promotes free trade. Restrictions on international trade are removed and there is free movement of capital and money between countries. Fifth, increase in international liquidity. The system of flexible exchange rates eliminates the need for official foreign exchange reserves if the individual governments do not employ stabilization funds to influence the rate. Thus, the problem of international liquidity is automatically solved. In fact, the present shortage of international liquidity is due to pegging the exchange rates and the intervention of the International Monetary Fund authorities to prevent fluctuations in the rates beyond a narrow limit. Sixth, market forces at work. Foreign exchange rates are determined by the market forces of demand and supply. Market is cleared off automatically through changes in exchange rates and the possibility of scarcity or surplus of any currency does not exist. Now, demerits of flexible exchange rate system. Low elasticities. The elasticities in the international markets are too low for exchange rate variations to operate successfully in bringing about automatic equilibrating adjustments. When import and export elasticities are very low, the exchange rate becomes unstable. Hence, the depreciation of the weak currency would simply tend to worsen the balance of payment deficit further. Second, unstable conditions. Flexible exchange rates creates conditions of instability and uncertainty which in turn tend to reduce the volume of international trade and foreign investment. Long-term foreign investments are greatly reduced because of higher risk involved. Third, adverse effect on economic structure. The system of flexible exchange rates has serious repercussions on the economic structure of the economy. Fluctuating exchange rates cause changes in the price of imported and exported goods, which in turn destabilize the economy of the country. Unnecessary capital movements. The system of fluctuating exchange rates leads to unnecessary international capital movements. By encouraging speculative activities, such a system causes large scale capital outflows and inflows, thus seriously disturbing the economy of the country. Fifth, depreciation effects of capital movements. Speculative capital movements caused by fluctuating exchange rates may lead to the problem of extremely high liquidity preference. In a situation of high liquidity preference, people tend to hold currency, interest rates rise, investment falls, and there is large scale unemployment in the economy. Sixth, inflationary effect. Flexible exchange rate system involves greater possibility of inflationary effect of exchange depreciation on domestic price level of a country. Inflationary rise in prices leads to further depreciation of the external value of the currency. Seventh, factor immobility. The immobility of various factors of production deprives the flexible exchange rate system of its advantages arising from the adoption of monetary and other policies for maintaining internal stability. Such policies produce desirable effects on production and employment only when supply of factors of production is elastic. So these 7 points are the demerits of flexible exchange rate system. Now, what are the other types of exchange rate system other than three that we have already studied? Adjustable peg system. An adjustable peg exchange rate is a system where a currency is fixed to a certain level against another strong currency such as the dollar or euro. Usually, the peg involves a degree of flexibility of 2% against a certain level. However, if the exchange rate fluctuates by more than the agreed level, the central bank needs to intervene to maintain the target exchange rate peg. An adjustable peg system usually allows country to reevaluate their peg if it is necessary to regain competitiveness. The adjustable peg is effectively a semi-fixed exchange rate. The Bretton Woods system of the 1960s and 1970s was an example of an adjustable peg system. Many Asian countries have an unofficial peg against the dollar. However, with the weakening dollar, many countries are considering revaluing their target exchange rate. Second is wider band system. A currency band is a currency regulation imposed by a government or central bank that specifies both a price floor and a price ceiling. Between these two specified prices, the currency can float, but at those limits, the currency price will stop floating. A currency band is a range of acceptable trading prices. The band has an upper and lower limit. Between the limits, the price can float and the exchange rate is dictated by supply and demand forces. Third is crawling peg system. It is a system of exchange rate adjustments in which a currency with a fixed exchange rate is allowed to fluctuate within a band of rates. The par value of the stated currency and the band of rates may also be adjusted frequently, in particularly in times of high exchange rate volatility. Crawling pegs are often used to control currency moves when there is a threat of devaluation due to factors such as inflation or economic instability. Coordinated buying or selling of the currency allows the par value to remain within its bracketed range. Now, demand for foreign exchange. It includes 5 points. First, पेमेंट ऑफ इम्पोर्ट्स. जो कुछ भी हम बाहर से इम्पोर्ट करते हैं उसको हम किस में काउंट करते हैं? पेमेंट ऑफ इम्पोर्ट्स में. सेकेंड है टूरिज़्म. हम लोग जो बाहर घूमने जाते हैं तो हम लोग उसको क्या करना पड़ता है? हमको इंडियन करेंसी को उस कंट्री की करेंसी से एक्सचेंज करना पड़ता है, तो वहाँ पे भी हमारा फॉरेन एक्सचेंज यूज़ होता है. थर्ड, यूनिलैटरल ट्रांसफर्स. इसको क्या बोलते हैं? वन साइडेड पेमेंट्स होती हैं, जैसे गिफ्ट्स हो गए, ग्रांट्स हो गए, डोनेशंस हो गए, एट्सेट्रा. फोर्थ, परचेज ऑफ असेट्स इन अब्रॉड. परचेज ऑफ असेट्स इन अब्रॉड का मतलब क्या है कि सपोज आई वांट टू परचेज वन बिल्डिंग इन अमेरिका, ओके, देन आई नीड द हेल्प ऑफ फॉरेन एक्सचेंज टू कन्वर्ट दैट इंडियन करेंसी टू इनटू दैट कंट्री करेंसी जिसमें मुझे बिल्डिंग खरीदनी है. जैसे मुझे अमेरिका में बिल्डिंग खरीदनी है तो मुझे इंडियन करेंसी को अमेरिकन करेंसी में चेंज करना होगा. लास्ट पॉइंट इज स्पेकुलेशन। स्पेकुलेशन क्या होती है? इलीगल एक्टिविटी हो। इसमें डिमांड तो होती है, लोगों के पास पैसा भी आता है, लोग डॉलर को बाय एंड सेल दोनों करते हैं इसमें, लेकिन ये क्या कहलाती है? इलीगल एक्टिविटी कहलाती है। क्यों? क्योंकि ये ओपन मार्केट में नहीं होती है और ना ही इसको गवर्नमेंट ने अप्रूव किया होता है कि ये एक्टिविटी को होना चाहिए इकोनॉमी में। वाई स्पेकुलेशन अकर? स्पेकुलेशन क्यों होता है? सपोज $1 की वैल्यू 50 रुपीज़ थी और मैंने $100 परचेज करे, मीन्स 5000 रुपीज़ स्पेंड किए, और जैसे ही डॉलर का रेट बढ़ गया यानी कि $1 इज इक्वल टू 60 रुपीज़ हो गया, तो $100 सेल करके मैंने 6000 रुपीज़ अर्न कर लिए। तो यहाँ पे प्रॉफिट अर्न करने के लिए $100 की डिमांड की थी, तो ये हमारी क्या हो गई? स्पेकुलेटिव एक्टिविटी हो गई। ओके स्टूडेंट्स, नाउ सप्लाई फॉर फॉरेन एक्सचेंज और सप्लाई ऑफ फॉरेन एक्सचेंज। एक्सपोर्ट पेमेंट रिसीव्ड। एक्सपोर्ट पेमेंट्स जो गुड्स एंड सर्विसेज को हमने बाहर एक्सपोर्ट किया है उसके बदले में जो हमको करेंसी आती है बाहर से, उसको हम एक्सपोर्ट पेमेंट रिसीव्ड में कैलकुलेट करते हैं। नेक्स्ट है हमारा टूरिज़्म। जो बाहर से घूमने के लिए इंडिया में आते हैं, या तो वो मेडिकल पे आते हैं, या वो स्टडी वीज़ा पे आते हैं, या वो एज अ टूरिस्ट यहाँ पे घूमने के लिए आते हैं, वो जो पैसा वहाँ से लेकर आते हैं उस करेंसी को। थर्ड, यूनिलैटरल ट्रांसफर्स फ्रॉम अब्रॉड। ग्रांट्स, एड्स हो गई, डोनेशंस हो गई, वी गेट फ्रॉम फॉरेन, जो हमको फॉरेन से मिलती है, आइदर या तो हम इंडिविजुअली लेते हैं या हमारी गवर्नमेंट लेती है उनसे। फोर्थ, परचेज ऑफ असेट्स इन डोमेस्टिक करेंसी बाय फॉरेनर्स। फॉरेनर्स क्या करते हैं यहाँ पे? हमारी फॉरेनर्स को, अगर किसी को यहाँ पे, जैसे हमने पिछले में पढ़ा था कि हमने कोई अमेरिका में जाके बिल्डिंग खरीदनी थी, अब जैसे ही फॉरेनर्स, अब इसमें क्या होगा? सप्लाई में फॉरेनर्स क्या करेंगे? हमारी कंट्री में फॉरेनर्स को कोई बिल्डिंग खरीदनी हो तो वो जो करेंसी का एक्सचेंज होगा। ओके, एंड स्पेकुलेशन हम ऑलरेडी कर चुके हैं। हमारा इम्पॉर्टेंट क्वेश्चन आ जाता है इसमें, जो एग्ज़ाम्स में पूछा जा सकता है, डिटर्मिनेशन ऑफ एक्सचेंज रेट। कि एक्सचेंज रेट को हम कैसे डिटरमाइन करते हैं। अब इसके लिए हम क्या करेंगे? फर्स्टली हम डिमांड एंड सप्लाई कर्व को ड्रॉ करेंगे, और इक्विलिब्रियम पॉइंट हमारा कहाँ पे होता है? जहाँ पे हमारा डिमांड एंड सप्लाई कर्व क्या करती है? इंटरसेक्ट करती है। ओके, हमने एक्स एक्सिस में क्या बनाया? क्वांटिटी डिमांड एंड सप्लाई ऑफ फॉरेन एक्सचेंज बनाया, और वाई एक्सिस में हम फॉरेन एक्सचेंज रेट, प्राइस ऑफ डॉलर इन टर्म्स ऑफ रुपीज़ बनाएंगे, और ओ आर हमारा एक्सचेंज रेट है, ओ क्यू इक्विलिब्रियम, क्वांटिटी डिमांड एंड सप्लाई फॉरेन एक्सचेंज की हो रही है। अब मान लीजिए कि एक्सचेंज रेट ओ आर हो जाए, तो इसका मतलब क्या होगा? कि एक्सचेंज रेट इक्विलिब्रियम एक्सचेंज रेट से ज़्यादा है, तो यहाँ पे डिमांड हमारी क्या हो जाएगी? कम हो जाएगी, और सप्लाई हमारी बढ़ जाएगी। और जब हमारी सप्लाई बढ़ती है तो हमने पहले पढ़ा था कि क्या हो जाता है? एक्सेस सप्लाई की सिचुएशन आ जाती है। ओके, तो हमारा ऊपर वाले लेवल पे एक्सेस सप्लाई की सिचुएशन आ जाएगी। अब एक्सचेंज रेट OR2 हो जाए, नीचे आ जाए, इसका मतलब एक्सचेंज रेट इक्विलिब्रियम एक्सचेंज रेट से कम हो जाए, तो इसमें केस में क्या होगा? कि डिमांड ज़्यादा हो जाएगी, सप्लाई कम हो जाएगी, और जहाँ पे डिमांड ज़्यादा हो गई वहाँ पे एक्सेस डिमांड की सिचुएशन हो जाती है। ओके, नाउ नेक्स्ट इज changes in exchange rate, change in demand. If exchange rate increases, it means dollar appreciates and rupee depreciates. If demand of dollar in foreign exchange market will decrease, then there will be new equilibrium point. वो कौन सा पॉइंट होगा? E2 पॉइंट होगा, which shows that exchange rate will decrease. जब एक्सचेंज रेट डिक्रीज़ कर गया तो डॉलर की वैल्यू डेप्रिशिएट कर जाएगी, और जो हमारा इंडियन रुपी है उसकी वैल्यू एप्रिशिएट कर जाएगी। इससे हमने क्या देखा? दो सिचुएशंस देखी कि जब एक्सचेंज रेट इंक्रीज़ कर रहा था देन हमारी डॉलर की वैल्यू एप्रिशिएट कर रही थी और इंडियन रुपी की वैल्यू डेप्रिशिएट कर रही थी। अगर फॉरेन एक्सचेंज रेट डिक्रीज़ कर जाता है तो वहाँ पे डॉलर की वैल्यू डेप्रिशिएट कर जाएगी एंड इंडियन रुपी की वैल्यू एप्रिशिएट कर जाएगी। तो ये हमारा प्रोसेस क्या हो जाएगा? चेंज इन डिमांड वाला प्रोसेस। हमारा आ जाता है चेंज इन सप्लाई वाला कॉन्सेप्ट। अगर हमारी सप्लाई इंक्रीज़ कर रही है तो डॉलर की वैल्यू डेप्रिशिएट करेगी और हमारी जो इंडियन रुपी की वैल्यू है वो एप्रिशिएट कर जाएगी। कब? जब सप्लाई हमारी इंक्रीज़ करेगी। अगर हमारी सप्लाई डिक्रीज़ कर जाती है तो क्या होगा? तो डॉलर की वैल्यू एप्रिशिएट कर जाएगी, डॉलर वैल्यू ऊपर चली जाएगी और जो इंडियन वैल्यू है वो नीचे आके डेप्रिशिएट हो जाएगी। सप्लाई इंक्रीज़ किया तो डॉलर डेप्रिशिएट किया एंड इंडियन रुपी एप्रिशिएट किया। ये इन्वर्स है चेंज इन डिमांड का, जो हमने चेंज इन डिमांड में पढ़ा था उस कॉन्सेप्ट का ये इन्वर्स है। सप्लाई इंक्रीज करी तो डॉलर डेप्रिशिएट करा और इंडियन रुपी अप्रिशिएट करा। सप्लाई डिक्रीज करी तो डॉलर अप्रिशिएट करा एंड इंडियन रुपी डेप्रिशिएट करा। नाउ नेक्स्ट है हमारा फॉरेन एक्सचेंज मार्केट, अ मार्केट वेयर द बायर्स एंड सेलर्स आर इन्वॉल्व्ड in the sale and purchase of foreign currencies. In other words, a market where the currencies of different countries are bought and sold is called foreign exchange market. The structure of the foreign exchange market constitutes central banks, commercial banks, brokers, exporters, tourists. एक्चुअल बायर्स एंड सेलर्स ऑफ द फॉरेन करेंसीज कौन से हैं? एक्सपोर्टर्स, इम्पोर्टर्स, टूरिस्ट, इन्वेस्टर्स एंड इमाइग्रेंट्स. दे आर एक्चुअल यूजर्स ऑफ द करेंसीज एंड अप्रोच commercial banks to buy it. The commercial banks are the second most important organ of the foreign exchange market. The banks dealing in foreign exchange play a role of market makers in the sense that they quote on a daily basis the foreign exchange rates for buying and selling of the foreign currencies. Also, they function as clearing houses, thereby helping in wiping out the differences between the demand for and supply of currencies. These banks buy the currencies from the brokers and sell it to the buyers. Foreign exchange brokers. These brokers function as a link between the central bank and the commercial banks and also between the actual buyers and commercial banks. They are also the major source of market information. These are the persons who do not themselves buy the foreign currency but rather strike a deal between the buyer and the seller on a commission basis. The central bank of any country is the apex body in the organization of the exchange market. They work as the lender of the last resort and the custodian of foreign exchange of the country. The central bank has the power to regulate and control the foreign exchange market so to assure that it works in the orderly fashion. One of the major functions of the central bank is to prevent the aggressive fluctuations in the foreign exchange market, if necessary, by direct intervention. Intervention in the form of selling the currency when it is overvalued and buying it when it tends to be undervalued. Now, functions of foreign exchange market. There are three functions: transfer function, credit function and hedging function. First, transfer function. The basic and the most visible function of foreign exchange market is the transfer of funds, foreign currency, from one country to another for the settlement of payments. It basically includes the conversion of one currency to another, wherein the role of forex is to transfer the purchasing power from one country to another. For example, if the exporter of India import goods from the USA and the payment is to be made in dollars, then the conversion of the rupee to the dollar will be facilitated by forex. The transfer function is performed through a use of credit instruments such as bank drafts, bills of foreign exchange and telephone transfers. Second is credit function. Forex provides a short-term credit to the importers so as to facilitate the smooth flow of goods and services from one country to another. An importer can use credit to finance the foreign purchases, such as an Indian company wants to purchase the machinery from the USA, can pay for the purchase by issuing a bill of exchange in the foreign exchange market, essentially within a 3-month maturity. Last is hedging function. The third function of a foreign exchange market is to hedge foreign exchange risk. The parties to the foreign exchange are often afraid of the fluctuations in the exchange rates, that is, the price of one currency in terms of another. The change in the exchange rate may result in a gain or loss to the party concerned. Thus, due to this reason, the forex provides the services for hedging the anticipated or actual claims or liabilities in exchange for the forward contracts. A forward contract is usually a 3-month contract to buy or sell the foreign exchange for another currency at a fixed date in the future at a price agreed upon today. Thus, no money is exchanged at the time of contract. There are several dealers in the foreign exchange market. The most important amongst them are the banks. The banks have their branches in different countries through which the foreign exchange is facilitated. Such service of a bank are called as exchange banks. Now, kinds of foreign exchange market. Two types: spot market, forward market. Spot market is the immediate delivery market, representing that segment of the foreign exchange market wherein the transactions, sale and purchase of currency are settled within 2 days of the deal. That is when the seller and buyer close their deal for currency within 2 days of the deal is called as spot transaction. Thus, a spot market constitutes the spot sale and purchase of foreign exchange. The rate at which the transaction is settled is called a spot exchange rate. It is the prevailing exchange rate in the market. Second is forward market. The forward exchange market refers to the transactions, sale and purchase of foreign exchange at some specified date in the future, usually after 90 days of the deal. That is when the buyer and seller enter into a contract for the sale and purchase of foreign currency after 90 days of the deal at a fixed exchange rate agreed upon now is called a forward transaction. Thus, the forward market constitutes the forward transactions in foreign exchange. The exchange rate at which the buyers or sellers settle the transactions in the forward market is called a forward exchange rate. Thus, the spot and forward markets are the important kinds of foreign exchange market that often helps in stabilizing the foreign exchange rate. Now the next, effective exchange rate, EER, measure of strength of one currency in relation to other currencies in the international money market. It means how strong is our currency in relation to currencies of our trading partners in the international market. Two types of effective exchange rate. First, nominal effective exchange rate, NEER. It does not account for changes in the price level while measuring average strength of one currency in relation to the other. Second, real effective exchange rate, REER, which accounts for changes in the price level across different countries of the world based on constant prices or real exchange prices.